Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I'll look some of the most interesting developments for this week. This video has been sponsored by Orbex. I will look at the euro dollar, dollar CAD, crude oil, euro pound and the NASDAQ 100. Now firstly, if we look at the euro dollar, as you know, this pair and especially also dollar yen will be on the watch list today because of the US inflation figures that will come out at 12:30 GMT. So as you know, an increase or good numbers, higher CPI figures could potentially mean that Fed will sooner or later should increase the rates, and that means obviously that maybe the US dollar could see some upside. When we are looking at the price chart of the euro dollar from a technical perspective, what is really important for now is that we have seen a reversal out of this downward channel last week. It was a very strong and aggressive rise, which looks like an impulse. However, the US inflation figures could potentially cause more weakness here in the near term for euro dollar. Now, the first support would be at 1.1860, but the second one is at this trend line and near 1.1790 level. So I think that this could limit the potential pullback here on the euro dollar, because after all, I'm still expecting at least another leg to the upside. Even if this would be seen as an ABC corrective recovery, I think that there can be more upside coming. Now let's take a look also on dollar CAD. If we see maybe US yields continue to drive all of these markets in these current directions, then of course lower 10-year US notes could potentially mean that commodity currencies will remain weak. Not only that, we have also crude oil that is somehow moving sideways at the moment, but looks like there was an important top put in place. So there is room for more weakness on energy, means that potentially we may see dollar CAD coming a little bit higher to maybe to retest this March swing highs here. So from an Elliott wave perspective here, I'm seeing a very nice bounce and now just moving sideways here. So looks like that this sideways correction, which is very slow and overlapping, is just a pause on the way up. Ideally, that's a wave B triangle. Of course, if we see a drop below that support, then the next level for potential bounce to watch would be at 1.2470, where you have this 61.8%. So that's actually the perfect fib level always when we are observing the corrections. But if the price action is moving sideways, then it's just longer sorry, then it's just longer in time rather than deep in price. So in either case, I think that there can be very good support for dollar CAD potentially for a move up into this wave C close to this 1.27 level. Also, if we take a look on crude oil, now crude oil came to the downside. Here is the daily chart. It came very nicely to the downside, found some support here when comparing the length of wave 4 compared to wave 2, but because it was a very sharp drop while the market is now just moving sideways, I assume that this wave 4 can still go towards 38.2%, which is in fact the perfect fib levels when we are tracking this correction. So there can be more weakness, meaning that lower crude oil could be positive for dollar CAD. Now let's take a look also on euro pound. Now euro pound is very sideways here on a higher degree time frame charts. So just to try to focus on basics of technical analysis and maybe just ignore the Elliott wave counts for a second, we have recently reversed and was looking for a move to the downside because we were trading last year at the lower side of this contracting range. So what we were looking, based on basic technical analysis, is to expect reversal back to the lower side of this trading range. And so far we have seen a very nice drop here, which in my opinion is made by free wave. So here's this big free wave drop, and what is probably the most important, at least for the next few days, maybe even weeks, is that the market accomplished this 5-wave drop here. Why? I think so, because we have seen a very nice and strong reversal out of this downward channel. We also have a divergence here on the RSI, confirming that this could be end of a wave 5 here. So based on minimum expectations, even if again this would be a corrective rise, you should still expect maybe an ABC recovery. So that's wave A. I believe you can expect wave B, and then maybe look for more upside into wave C. So at least for the short term, I think that Euro pound here could see more upside after retracement. And now let's take a look also on NASDAQ 100. Now NASDAQ 100 here is the 1 hour chart is coming very nicely to the upside. We've been tracking this one for a while, and I think that we may see a reversal all the way back to new all-time highs. Why? Because the previous drop was also seen like a free wave movement. So it's always much easier to look for more upside in uptrend whenever you can label the pullbacks in free waves, and that was certainly the case here back in March. So back then we turned bullish, and looks like this recovery has started firstly with these 5 waves up, and then a flat formation here that was finished at 12,620, and since then you can see that prices are now actually accelerating rather than slowing down. So this is typical example of a third wave in progress. So I think that there can be even more upside coming after a wave 4 pullback. Maybe this wave 4 is already unfolding here. 13,650 is the 650 is the first support, then you have a little bit lower support here at the former wave 4. So for now, of course, price is a little bit too high, maybe for some to buy, especially if you're looking for some short-term trades. But I think that if we see a next dip, then pullbacks could be interesting, at least until we see a retest of these highs here. Traders, thank you very much for your attention. I hope that you enjoyed this video. And again, I will talk to you for Orbex next week. Bye.